Another thing that stood out yesterday was the bank's commentary around negative rates and specifically commercial banks' preparations for negative rates. Now, even though the bank doesn't want to send the signal that you have any inclination to move towards negative rates at this point, I just wonder why it is taking so long for UK institutions to be ready for the possibility of negative interest rates, especially when the rest of the world and many of the major central banks in the rest of the world are already in negative rates territory. Why is the UK lagging so behind?
Well, there are two different questions there. There's one, why are interest rates where they are, which is really a question of the economy and inflation and so forth. I'll come back to some comparisons on that point in a moment. And then the second question is the technical feasibility and readiness. Actually, if you go back to the time back in 2014, in fact, when the ECB introduced negative interest rates, they had similar preparation times. So I don't think it's unusual at all to find that banks need some time to get their IT systems ready to deal with it. And those are similar lengths of time, as I say, that you saw in continental Europe. As to the need for it, I would say we have been, at least, in a slightly different place from the ECB, which found itself in 2014 having already had a long period of inflation below target, and indeed inflation expectations dipping below target, and we've not been in that position. And so that's why yesterday, for example, the MPC said it saw the current setting of monetary policy as, quote, appropriate. So it's more a question of whether you have needed to ease additionally. Obviously, we've done a lot already. And then, you can call it lagging, but it's a different economy, a different environment, and that's the main reason. As to the preparation times, as I say, I don't think they're unusual in comparison with elsewhere.